is the AI bubble forming? Strategists cite gold and Chinese stocks as hedges. Host, today we're discussing the emerging signs of a bubble in the US stock market's artificial intelligence sector. With valuations stretched, some strategists are beginning to recommend gold and Chinese stocks as potential hedges and diversification tools. Co-host, this topic is really gaining traction lately. Should we dive straight into today's discussion? Host, let's start with the US market. The AI frenzy has propelled stocks to such lofty heights. Why are we hearing more voices warning about bubble risks in the S&P 500 and the AI giants? The S&P 500's forward PE ratio has reached 23 times, significantly higher than its 20-year average of 16 times. Co-host, correct. And particularly for those key AI players, their valuations have deviated far from historical averages. That's why strategists, including Bank of America's Michael Hartnett, are cautioning investors to be wary of bubble risks. Host, I'm curious, with AI-related asset prices in the US soaring, why are more people looking to gold and Chinese stocks as hedges? Co-host, well, this AI boom keeps pushing US markets to new highs. In this context, some strategists recommend gold and Chinese stocks for diversification. Gold can hedge against resurgent inflation, while Chinese stocks are benefiting strongly from the rise of generative AI and have become an important destination for diversified capital allocation. Host, so, even as US markets hit record highs, underlying concerns about an AI bubble bursting are driving investors towards these alternative and safe haven assets? Co-host, exactly. Michael Hartnett from BofA believes AI stocks will likely dominate the market in the short term. However, he still advises investors to allocate to gold and Chinese stocks to hedge against risks stemming from this boom or a potential bust. Host, understood. Given these high US valuations, what specific bubble risks exist within the AI sector? Co-host, currently, the S&P 500's forward PE is at 23x, much higher than the 16x historical average. The index is up over 16% this year. Even more extreme, the so-called Max 7 tech giants now account for over one-third of the index's weight, with a collective forward PE of 31 times. Such high valuations mean if even one major company disappoints on earnings, it could trigger turbulence across the entire sector. Host, you're saying that if a company's performance falls short, like Meta recently, due to concerns its massive AI investments aren't yielding sufficient returns, it could cause a pullback. Even if it hasn't reversed the overall upward trend, it forces investors to re-evaluate the risks and valuations of AI stocks. Co-host, precisely. Host, let's delve deeper. Why does Hartnett's team see gold as an effective hedge in the coming economic environment? Co-host, they view gold as a very effective tool against future inflation risks. Many investors are positioning for strong economic growth in 2026, anticipating Fed rate cuts and potentially market-friendly policies under a possible Trump administration. Essentially, they're betting on a looser environment, but that very environment carries inflation risks, hence the renewed appeal of gold. Host, right, so loose monetary policy combined with economic expansion could easily rekindle inflation. In that scenario, gold, as a traditional store of value, attracts more attention. Even though gold recently retreated from its all-time high above $4,300 per ounce and saw a record weekly outflow of $7.5 billion from global gold funds, the fundamental hedging logic for gold remains intact. Co-host, exactly. Host, now, why is Bank of America particularly bullish on Chinese stocks? Has China's market shown any standout performance this year? Co-host, Bank of America strategists are very optimistic about Chinese equities. They've observed that Chinese stocks have significantly outperformed the S&P 500 this year. The MSCI China Index is up 33% year-to-date. Host, 33%? Co-host, yes. The core driver behind this is growing market confidence in China's competitiveness within the generative AI field, especially with the emergence of AI models like DeepSeek. This confidence has become particularly evident recently. Host, so today we've extensively covered the bubble risks in the US AI sector and explored why gold and Chinese stocks have become preferred hedging and diversification tools in the eyes of many institutions. Co-host, that's right. That wraps up today's episode. Thank you for listening, and we'll see you next time.